Inflation data out just moments ago. Anything in that to disrupt this easing bias that seems to have gripped the Fed over the last few months?
First of all, it's very fresh data, so I haven't had time to go through it in a lot of detail. But at least on the headline level, it seems to be confirming the path that we're on. We've made a lot of progress in the last year or so bringing inflation down. I need to go through the components of that release, which I have not done yet. But generally speaking, goods inflation is back down to where we want it to be, where it was pre-pandemic. Services inflation, which is tied to wages, is gently trending down. And then finally, housing inflation, we know, is a lagging indicator. We know that it takes a couple years for the new leases to turn over. And the new leases are showing that we're headed in the right direction. So right now, I think that inflation is headed in the right direction. I've got confidence about that, but we need to wait. We've got another month or 6 weeks of data to analyze before we make any decisions. One of the things that has been very noticeable over the last week is the change in investors' views about where you're going to end up. If you're looking at SOFR futures right now, they only price in about 75 basis point cuts between now and the end of 2025. Are we entering a period, because we don't know what Donald Trump's policies are actually going to be, where the dot plot, the summary of economic projections are kind of off the table, can't really put a lot of faith in them, and that maybe you're in the Lael Brainerd attenuation phase where you slow down everything and people should expect not a lot of guidance from the Fed? Well, the dot plot is something that at times, I'm glad we have it, and at times it's more of a frustration that we have to fill it out because there's so much uncertainty about the economic outlook. Over the past year or two, I've been surprised at the resilience of the U.S. economy in the face of seemingly quite high policy rates. Yet the labor market has stayed strong and the economic growth continues to surprise us. So for me, I've been asking questions about where's the neutral rate for the last year or two. That's not about the election. That's just about how the economy has been performing over the past year or two. And so, for example, there's been revisions that suggest that productivity is now higher than it had been in prior years. If that higher productivity environment is maintained, that would tell me we're probably in a somewhat higher neutral rate environment. Again, that's not about the election. That's just about how the economy has actually been performing. And so for me as a policymaker, that's what's leading to my own uncertainty about where is our ultimate destination. And I think that people are raising questions about what is the new administration going to do? What is the new Congress going to do? I think that's also adding uncertainty about ultimately what's the growth trajectory of the U.S. economy.